Hello, my name is Pedro Robert, and after over 25 years of investing experience, I founded the Wealth Insider Network. In this short presentation, what I'd like to share with you is an insight in how professional investors like us invest. But before I start, I would like to ask you two questions. Do you want a good, reliable way that will consistently grow your wealth? And secondly, would you like this investing to hardly take up any of your time? If the answer is yes, then please continue watching. Did you know that some 95% of traders and investors lose money in the markets? So what does this mean? It means that money flows to the remaining 5% that actually know what they're doing. So let's take a look at how Wealth Insider Network members make up part of this 5%. Regardless of whether you have no experience or some years of experience in the investing world, the first thing you must be is a smart investor. So what does that mean? We have to approach the market correctly by first looking at sectors, the most desirable companies within those sectors, doing the appropriate analysis, understanding the basic rules, and trading psychology. So let's see what influences the price of shares. Firstly, we have the economy. That comes down to the actual market, and that moves further down into individual sectors, which again are broken down into industries. For example, the technology sector can be broken down into industries such as software, internet, data storage, etc. And finally, we have the individual company itself. But the fact is that 80% of what the share price does actually has nothing to do with the company itself. So let's look at the first part of being a smart investor. And that's to say, the power of sector investing. Now, there are 5 stages in any economic cycle. The key is knowing which sectors to invest in at which stage. So let's see what the 5 stages are. 1. Early expansion. The sectors that tend to benefit here are capital goods, technology, and transportation. Number 2. Middle expansion. Now here the capital goods sector is good again. Number 3. Late expansion. The winning sectors here are energy, basic materials, and consumer staples. Number 4, early contraction. This favors consumer staples such as food and utilities. And number 5, late contraction. The sectors that are benefiting here will tend to be the financials and the consumer cycles such as tobacco and alcohol. Now that we understand what sectors offer the best results in the various parts of the economic cycle, we need to know one more thing. We need to know where we are in the economic cycle. So this can be easily identified by looking at the heat maps on marketwatch.com or in the leaders and laggers section of the Financial Times. So I hope that you've enjoyed this brief insight into how we invest and how we are part of the winning 5%. If you want to grow your wealth like the 5%, then I look forward to seeing you on the inside very soon. Thank you so much for your time.